February 1st, 2014. The time, 9:15 a.m. Pacific Standard Time. The time in the East is what? 12:15 Eastern Time. One of the things that we have before us is called the volatility index. It is the fear indicator. And right now the Dow has been down 240 points, Nasdaq 100 down 54, Nasdaq composite at this moment down 77, and the S&P 500 is coming down to 1754. Almost a total of a 100-point correction to the downside. Therefore, what we are going to say is there is a lot of fear. Behind me is a daily chart of the fear indicator called the volatility index fear indicator. So when we capitulate, this breaks out and markets break down. This daily chart right before me, which is the capitulations that's happened before. Last time was 411 when we had a small correction in 2013. We had another breakout here when we called the short in 2013 May. Yeah, it's on the website. We went up, we capitulated to the upside, and then we came down and markets had rallied. There was another point in time that on 9/20 of 2013, we went straight up on the VIX, and this is a 15-minute chart that I'm going to show next, but this is the daily, and now this is the fear, and these markets were long overdue. But like we have clearly said, when we put in the bottom, then good stocks are going to hit their lows. Right now, it's a capitulation that the bull needed to go through. I'm going to draw a trend line up here because this is the lunch hour period, and so we want it live right now. Remember, MMTs, it's all here and live, and the short sellers, the bears are in control. Finally, this market is coming down. That means that the exuberance, when we take a look at the S&P behind me, this is a daily level. This S&P right now is breaking down on the index. It's below the 20-day simple moving averages. It's a weekly chart. So we're definitely selling down below the 20-week. That is a weekly snapshot. And nonetheless, before a bull can get going again, you have to have these big sell downs. It cannot nor will not ever be a one-sided market. It's not going to be that way. We told everyone from the beginning of the year that going into 2014 that the volatility, the price volatility would get to where people could not even deal with it, and that fear must escalate again in order to get all the sellers out of the market. Remember one thing. The margin debt was at all-time highs like it was back in 2007. Let us not forget the other most important thing is that the shorts were all taken out of the market during 2013, and publicly traded companies were buying back all of their stock, which contributed to the big side of the move in 2013. Hey, it doesn't matter. These markets need to correct. Now, that is a weekly on the S&P. This is a daily chart, and I'm also going to want to show this reversal daily. This is the S&P 500. It's breaking down below the 100-day moving average. As that's breaking down, you can clearly see right here, you can clearly see the breakout of the fear goes higher, and we are capitulating. We have broke down in that S&P. Yes, it's going to get short-term oversold. Yes, you'll have to have your shopping list together. The good leadership stocks that pull back in market cycles called price discovery cycles is that they will bounce at some point, but not until this fear indicator continues to go higher, and it's right here. That is the fear indicator at 9:20 a.m. Pacific Standard Time. This is that daily movement here and now. breaking that 100-day simple moving average. We talked about it. That was at 1765. And once again, let's just take a look at how the fear indicator is working. This is the VIX, and we're approaching all-time highs. If we do break higher, then we're going lower. And I just wanted this update to come into play right now and that everybody understands what is happening on an intraday level. Now, having said that, let's take a look at the Dow. That Dow is testing that 200-day simple moving average. What a big reversal that we called for in the Dow component. They brought them up to the January high. This is February 1. And what does it mean? It means that the leadership in the 30 stocks in the Dow are coming down and testing what we call the wall of support, which they haven't done. And it's been over 400 days since we've had a broader 10% correction, and markets, as we have clearly stated, and we're going to state it again, just in case you got a case of amnesia, that you were going to get the bear volatility and you were going to get the bull side volatility. Both parties are going to have the volatility that each side at certain times of these markets are going to get. And right now, at the lunch hour, starting off the first trading day of the month, we have a continuation that this sell down is taking everybody to the woodshed. That 200 simple day moving average is crucial. Another thing that I am going to say is I'm going to put this Nasdaq 100 in here. That was so overbought forever is that we can clearly see that we have broke below the 50-day right here. The white line. The 100-day is going to come into play. The Nasdaq composite had been the best performer in 2013 on the Nasdaq composite. And you are breaking clean through that 100-day simple moving average at 9:22 a.m. Pacific Standard Time. We also know another thing is that people do not know how to handle price volatility. Price volatility goes both ways. It's not a one-sided event. It never has been. And it's time that you learn what it is, because until that day, you will not be participating in these markets. Because when that volatility starts to burn at the higher level, you're going to want to puke right in your chair. And that's when we know that's when we're getting toward the bottom. At some point in time is when you want to throw all up on your keyboard because you can't handle it. And you know what I'm talking about. And that's going to be where we get net long at some point, because the bull will get its days up and the bears will get its days down. And the thing about it is, it's happening here and now. And you can kiss 2013 goodbye, because you know what? We are going into the fifth year of this expansionary model, and all of the indexes, the economy, the cheap money, the adding liquidity to the market, being exuberant with the FOMC, it's all going to catch up to itself at some point in time. And not only that, you can still get your shopping list ready. There will be great bounces at certain times. I'm going to show you now, though, that is what that Nasdaq composite is doing. The S&P 500 once again at 9:24 a.m. Date 2014 it is. It's the first trading day of the month, but the date is actually 2/3. And you know what? We talk about expansion models. We're going to end a 60-month move off of the 2000 lows, and we put those in 5 years ago. We're starting the 6th year. That will be March number 1. Now, the great thing about being a short-term trader is you get to take advantage of the shorter time movements. And let it be known that we feel that we have given everyone the things to look at. And our traders are people worldwide and people that know me for a very long time. And the best time to get long the market is when that fear stops going higher, then you'll have an automatic low. But everything is done in shorter term cycles. Therefore, that's where we're at. And we just want to make things clear that there will be a time to buy good stocks that have been not getting a correction forever. Because really, that is the truth. Here we go, everybody. Here's what we have tried to tell people. What we have tried to tell people, and we just like you to know that the live analysis and all the indexes are here. The timestamps are here. The after hours trading is here. Nobody can deny the live events. And if anyone does, well, obviously they would be the haters of the world, because the thing about it is we call for this long in advance, right here. The bull is in trouble, right here. Right here. The bull is in trouble. The Dow Jones, the S&P 500, S&P 500, Apple, you name it, it was all done before the fact. And here's the most important thing. We want to see you come out ahead. Yeah, we do. And in order for this to happen, then you're going to have to get right here, right now. And you go to that trading here right now, and you click on that free trial tab, and you sign up here right now. You want a trading account? You want to get trading capital? We'll fund that trading capital to your account. Just hit open an account, read the content, and go from there. Right now, we're undercutting markets. We have hit 9:30 a.m. Pacific Standard Time, 2/3 of 2014. We are going to look at where the better stocks will bounce on their support levels, and when all the sellers are out of the way, then we'll look at the broader leadership in the indexes, and that's exactly what we're going to do. And we'll get short-term good trades off of these bottoms. Remember one thing. This was done before the fact, not after the fact. We are going to come up, and if we break through that high later in the day, or if that wall of resistance in the fear indicator holds, then markets will put in short-term bottoms for short-term trading ranges.